What's going on, everybody, and welcome back to another episode of the Get Over Yourself podcast. Today, I'm doing a live interview, so if you're not watching on Spotify or YouTube, you might want to switch over to the video version of this show. I got my dear friend Levi Duke sitting next to me. I've actually known Levi for the past 4 years now. Ever since I was a freshman at Brigham Young University, I met Levi at this amazing club that we have. It's called the Seed Club. It's basically anyone at BYU who owns a business, any student who is working on some kind of entrepreneurial venture that actually has some traction and done some revenue, you're allowed to join this club. And Levi and I, we connected basically since day one. Levi served an LDS mission, much like myself. If you've been listening for quite some time, he served in Brazil. So we kind of had an instant connection, and we've been good buddies ever since. So in today's episode, we're going to be hearing from Levi directly about his company, ChoiceGuard. ChoiceGuard is basically automating the insurance for Medicare, where you can go through and you can find plans instantly. You don't have to necessarily talk with a licensed broker. You're going to dive into that and correct exactly what I'm saying here, but something very, very intuitive. It's revolutionary inside of the Medicare space, something that's obviously provided for Levi's family for quite some time and something he's looking to grow. So in the episode, you can learn a little bit more about ChoiceGuard specifically, and Levi is a part of our Young Founder series. So he's another young founder who's going to be sharing some helpful tips for young entrepreneurs out there. So with all that being said, let's jump into today's episode. Levi, thanks for joining us, man.
Yeah, happy to be here.
So like I mentioned, we've known each other for a little over 4 years now, which is kind of weird to think. But one thing that always resonated with me when I first met you is you're just a very laid back, chill kind of guy, which is pretty unique for a lot of the entrepreneurs you meet, especially ones who are a little bit younger. I feel like, I don't know, I sometimes get the claim where it's people like me who are fast paced, always on the go, but you're like that, but you're also very mellow. You don't let a lot of things stress you out. So tell us, the audience, a little bit about your background, where you come from, just about yourself.
Yeah. So I actually grew up mostly in Utah, but I also lived in California for about 6 years, and we've moved around within both states. So I've moved so many times, it's hard to count at this point, but I claim South Jordan as home and went to Bingham High School for anybody out there who might be familiar with the Utah high school system. And I've been at BYU for 6 years now, but I just finished. So, I was able to get it done eventually, but that's exactly how we met. And yeah, anything else you want to know?
Yeah, I think we're going to touch on that a little bit. I have spoken on this podcast pretty openly in the past that school and traditional college education isn't my favorite thing. BYU's blessed us tremendously just because of the resources for our businesses and whatnot. But give us this isn't the main topic of the episode, but give us your 30 seconds pitch on yes college or no college.
Yeah, yes depends. I'd say if you go in with the right focus and you realize that you're not there for the degree, so to speak, and you're not there just for, the general ed classes for sure. But if you're going to network, if you're going for the other opportunities, like we have the Seed Club, where I've met amazing people. I've gotten connected with amazing mentors. There's been grants, things like that. It's been super valuable for me. And I've been able to get things out of it, especially from the adjunct professors who are entrepreneurs. And so the more you can tailor your education to yourself and the more you can take control of your own education, the more valuable it'll be.
Absolutely. I kind of agree. And I've already shared my opinion, so I won't dive into it. But college, if you do it right, it can be beneficial, especially here at a place like BYU. It's relatively, compared to most universities, not a horrible cost. A lot of the things we get back just purely through resources and networking and mentors and stuff. But yeah, if you're going, especially for anyone who listens to this kind of show, if you're going just to show up and take regular classes and not really care about your business, it's probably not going to work out for you if you're going the entrepreneurial route. But well, cool. Let's dive in a little bit about your entrepreneurial journey. Kind of tell us what got you excited to be an entrepreneur when you were younger, and then we can go through and kind of dissect your journey, and then ChoiceGuard, what you're currently working on that's absolutely killing it right now.
Yeah. Well, I actually grew up in a family where we didn't always have the kind of financial resources that I saw other kids have. And so I think that might have motivated me from a young age. I was the kind of kid who would sell candy bars at school and make money. I'd sell my video games for a profit, do stuff like that just to reach goals that I had to buy an Xbox, for example. And so I think from a young age, that got me started. And in high school, they would do those fundraisers and things like that for different trips. And I'd go door to door selling cookie dough and stuff like that. So I think that's probably what got me started. And I just knew that to get the financial outcomes I wanted and also to have a fulfilling career, I pretty soon saw that entrepreneurship was in my future.
What's crazy about some of those fundraisers, I've learned this as I've gotten older, but we did some of those things back for like my high school sports and stuff too. But those fundraisers make so much money compared to the schools.
Oh yeah.
And granted, I know they're doing like the resources, they're providing the cookie dough, or in the cases that we did like a lot of those school banners that would hang outside on like a fence of your school. So it'd be like advertising for local companies when people would drive by. But the people who actually ran those events made so much money. It was
Yeah.
ridiculous. So smart. You get these kids who are like, I can win a backpack. And you get
So
all
true.
excited about it. And you have like these little kid salesmen who are going door to door and getting all their friends and families just being suckers and saying, sure, I'll support your cause. Those things make a killing. I think it's hilarious.
Yeah.
But so you recognized at a young age, you said, all right, I don't want to kind of do the standard mold. I want to kind of make my own money and take it on my own path. And I think there's something to be said about entrepreneurs who find that out from a very young age. I was similar. I would go around school, especially during like the fidget spinner era. I'd go around when everyone was annoying their teachers and stuff for those things. I saw it as like a massive profit puppy. I go and I buy tons of them off Alibaba, and literally at lunch, everyone would come outside to my table and be like, hey, you're the fidget spinner guy. Give me one of those. And I'd upsell them and stuff. But I think you can definitely learn entrepreneurship at a later stage in life. A lot of people get into it. The most successful entrepreneurs, technically, if you're looking pure at statistics, it's 45 plus because they have some savings. They already have gone through life. They've worked in different industries. I think it takes a different breed of people to start young. And that's who listens to this show. That's people like you and me. What actually got you excited for saying, hey, I want to take on all the risk. I want to have the financial reward, but it's challenging. So what got you into it to begin with, besides I was interested when I was younger?
Sure. Well, actually, I was planning on being an engineer, a mechanical engineer, since I was in the fourth grade. And then it was later where I was like, oh, I want to do entrepreneurship too. And originally I thought, well, I'll get an engineering degree, I'll get an MBA. And then when I have all the knowledge I need, then I can start my business and I can do like an engineering firm. But then I realized pretty quickly that there's a shortcut to entrepreneurship, and that's just starting now rather than waiting until you've got all the degrees you need in order to get started. So I had since switched, and I got through one semester of engineering prereqs, and then I switched to pre-business pretty quick. But funny enough, I actually was one of those, honestly, hopefully this doesn't offend anybody, but one of those suckers in college who would easily get convinced to join summer sales and multi-level marketing. I had a roommate actually who told me he was going to go do summer sales for the summer, and he didn't.
Let me put a pause real quick too. So anyone, it's very common here in Utah to know what that is, but so anyone who's listening outside of Utah, the Summer Sales Organization, it's basically like Levi said, it's an MLM, one that actually does have historically better rates of paying out than traditional MLMs that you might picture. But it's basically you're signing yourself up to go door to door and sell some kind of service, pest control, alarms, solar, anything like that. If you've ever lived in a home and you've had somebody knock on your door trying to sell you something, that's the basic scope of what we call summer sales.
Right.
Go ahead. Yeah.
Yeah. Well, I had a roommate who told me, yeah, you could make potentially $1,000 a day doing this. And he wasn't even trying to get me to join. He was just sharing. I was like, can I do that? Like I signed myself up for summer sales. I didn't even get recruited. And so like that I just had that kind of drive and desire to make money and get ahead in life. And originally it was to pay for college. And then later on, I'll share how I use summer sales to help fund my business. But I started off with that. And then also, I ran into multi-level marketers with more of the traditional MLMs and actually ended up joining Amway for a year. Later found out that wasn't the right kind of business opportunity for me. And I have my own reasons for that we don't need to dive into here. But it did actually give me a foundation of just the drive to do something that's hard. And I was able to see the value of hard work and entrepreneurship and the dream to be able to have financial freedom really caught hold within me.
Heck yeah. And it's funny you bring this up. And once again, here in Utah, sometimes it's a stigma people place on these door-to-door sales reps. And I think it comes from a history of, sometimes people aren't the most honest, or they are super flashy with their money and stuff. But what interests me is I also joined that realm. I went door to door for 2 years, nothing absolutely crazy. But now working on Interval, we sell our software to a lot of door to door companies. And you recognize at the end of the day, these people, albeit sometimes they're very flashy and sometimes very cocky with their funds. But some of the more down to earth ones and whatnot, they're just people trying to provide for their families, get ahead in life, and actually start working on something more impactful. And at the end of the day, it also teaches you basic sales skills, which of course, if any business wants to survive, you need to have.
Yeah, it's foundational.
Yeah, foundational. So take us through your journey now. You've kind of gone through your upbringing. You've gone through a little bit of your sales game, and now let's get to Choice Guard, the meat of the conversation here. Tell us
Yeah.
about Choice Guard. What are you guys doing? Why did you start it? What's your background in it?
Yeah, so I actually got a job after summer sales, my first summer, at a call center selling Medicare health insurance. And for me, it was just a job. It was a sales job to get me through school. At the time, I was still focused on the engineering route. And I just realized I could make way more money in this call center selling insurance than I could doing any other job, like working, fast food or anything like that, which all forms of work are honorable. But I just wanted to be able to make more for less time. And so I ended up doing that. And at the time, I was part-time while going to school. And the company made a decision where they were going to lay off any part-time workers unless we switched to full-time. So I actually took time off of school to continue working full-time at this job because I wasn't quite ready to end it. But after that, I realized I wanted to go back to school and decided that, hey, I was going to have to quit. And at that point, I realized I knew I wanted to do entrepreneurship. And so after having gotten licensed and trained to sell insurance, I thought, hey, maybe I could give this a shot on my own, just see if it'll work. And I ended up doing that. I took a few months of time, and this was actually in 2020 when I quit. So it was COVID, everybody was inside, and it allowed me to work from home. And I started, I built a website, I ran Facebook ads, I learned how to do that by watching YouTube videos and things like that, and just really hustled.
I mean, what else are you going to do during COVID, right?
Exactly. And so I ended up trying to see if I could get that to work. And I actually didn't make it work at the time. I realized it took a significant amount of skills and opportunity for capital in order to get this off the ground, to get a profitable lead generation system and then be able to close it. And there's a whole learning curve on what it took to actually build the business side, not just the sales side. And so I ended up needing to go back to work soon after companies started allowing people to come back, with masks and all that. And I actually went and sold over the phone pest control, which is what I was doing door to door, just to make money during the summer. And then I ended up, funny enough, I ended up getting fired from that job because I was not the ideal employee. I was the kind of employee that I would work really hard. And I was crushing the conversion goals for the sales team. But I ended up one time, my manager asked me to hop on at 10 p.m., to do a training. And I said, hey, I'm with a friend. I don't even have my laptop. I'll do it first thing tomorrow, but I just can't do it right now. And he's like, no, you got to do that right now. And I was like, hey, I try to keep my home and work separate. And that wasn't a good fit for their culture. They wanted us to
Pick up the phone whenever we text you.
I needed to be at their beck and call. And so I decided, which I get as a manager, you have to, set ground rules, and it just wasn't a fit. So I ended up getting fired the next day. I went back to summer.
No, what's funny now though is me and Connor, it's like if one of us calls each other, it's like expected we have to answer at this point. So I think it's like funny because in some ways I'm agreeing with you, and then other ways I'm like, wait, me and Connor are that like toxic manager for each other right now.
Yeah. I don't know. Maybe part of it was just my own immaturity as well.
Yeah.
But at the time
I'm sure you're justified.
Yeah. Anyway, so I ended up doing summer sales again during that time and saved up money. And I was able to make enough where I could provide for my family. I got married that following year as well. And it was enough where I could start the insurance agency back up again. I had money to burn and try out different marketing campaigns, and ended up finding that we were able to profitably acquire leads and customers. And at that point started scaling from there.
So tell us a little bit about Choice Guard, the Medicare brokerage right now. What, even before, I feel like even a year ago or something, we were having this exact same conversation, you and me, and I was like, I don't understand Medicare. It's something that people our age don't have to deal with unless you're selling it. So tell us a little bit about it.
Yeah. So when people turn 65 or they have some sort of disability, they qualify for Medicare health insurance through the government. And a lot of that is standardized, but there are plans that help lower those costs. And all of those plans are run by private or publicly traded health insurance companies. And they're going to differ in every zip code. They're going to differ by company. And even each company has multiple plans. And so it takes someone knowledgeable in the space to go through and look at dozens of options in someone's area to find which plan has the right set of doctors, benefits, prescription coverage, all of that, and which one will save the most amount of money in a given area for a person. So as a broker, my job is to facilitate that shopping and comparison to find
Basically,
it.
just make everyone who's shopping around feel comfortable with their decision at the end of the day. Present
Exactly.
them the plan, say, um, you may want more focus on dental because of the condition of your teeth.
Hmm.
Your hearing's going out. Maybe we want to start focusing on hearing. Let's get those two things pinned on the plan. And then your eyesight's still really good, though. So maybe that has less of priority.
Exactly. Just helping them navigate that complicated system.
So, why, in essence, can somebody not go through online or something
Hmm.
and just go through and choose a plan for themselves? Why do they need to talk to somebody like you, a broker or sales rep?
Yeah, they totally can go online and do that. The thing is, it's pretty convoluted. There's a lot of different rules. There's enrollment periods. There's special enrollments that give you exceptions to the rules. There's
Because
different
why
ways
not? Why
networks work.
not?
Because why not? It's the government,
We
right?
love the government.
Exactly. And each year rules change. And so it's a lot to keep track of yourself. And brokers don't cost anything extra. They're free to use. And so you may as well just talk to somebody who does this all day.
And you're kind of with ChoiceGuard, you're trying to automate that process a little bit more. I want to start hearing, what is ChoiceGuard and what exactly makes your brokerage different than any other one? You can submit a form on some kind of website and have somebody calling you within a couple minutes.
Sure. Yeah. So eventually, as things started to work for us, I tried to scale it by hiring employees. And there's different challenges that come with that. Obviously, every business, as they scale, needs employees. One thing I wanted to see is if we could actually automate some of that to have less employees, just because that's one of the biggest overheads of most businesses. And so I ended up building a website. Took about a year or so to build with engineers, and we built a tech company that recommends or a web app that recommends health insurance plans based on our customers' input. So it does the job essentially of the insurance agent to analyze and compare virtually every major insurance company to see which plan has the highest estimated benefits and savings for that individual.
So they can go through now and kind of pick and choose, like we were just saying, but it'll all kind of do it seamlessly where there's no
Hmm.
confusion or anything about it.
That's the goal. Yeah.
And tell us where you guys are currently at with
Hmm.
what you're working on right now. I think it's absolutely genius. And a lot of the young entrepreneurs, I think, could really resonate with what you're doing right now.
Yeah. So we started off with that, found that there's still some various touch points and friction that we're smoothing out. But one thing we've done to try to help smooth that over is we've actually started implementing AI into our business. And in particular, we're using voice AI phone calls to call our leads. And at this point, we still do have brokers in the process,
Mm-hmm.
closing a lot of those deals. But what happens is the AI insurance appointment setter will hop on the call and basically qualify the lead, go through the various benefits that might be available, and then book an appointment with a broker to close the deal. And so that just saves us as brokers a ton of time in trying to figure out which leads to prioritize.
Oh, yeah, because you'll get a million different applications that come through your website or through the ones that you're buying when they fill out a form on a website. And then at the end of the day, it's not the right fit
Yeah.
whatsoever. They don't qualify. They already have somebody and they're looking for in 6 months from now or whatever
Yeah.
the case may be. It's very hard. So this automated outbound AI phone system, it's going through and basically qualifying those leads. So you and the rest of the team don't have to sit there and worry about anything. It's literally
Exactly.
people who have come, they're interested, they're qualified, and they're ready to pick what plan is ready for them. So what does that look like? What's your new day-to-day look like then, coming from that realm where now you have a lot of those leads who are actually qualified? Obviously, you don't land every single customer still
Mhm.
or client, but I'm assuming the process is a little bit more smooth than it was in the past.
Yeah. Yeah. So now we have that initial outreach completely automated. And so, in terms of me personally, I'm still selling right now as a broker. Eventually, plan to kind of step out of that role as we're able to grow and scale. But what happens is with my day is I come on and I see all of these people who have booked appointments or indicated that they want to call later that day. And I'll just go through, give them a call, and I've got all the information that I need to provide that recommendation. So it just simplifies my process and it's a lot quicker. And I use our website to actually help quote that person and find the plan that works for them. And so from there, it's just we submit the enrollment application, we get a commission on the back end. Is
That's
how we
awesome.
get.
So knowing a little bit more about ChoiceGuard and your own personal journey and stuff, there's a couple other points I want to hit. And you kind of did a prelude to this at the very beginning, but this entire company, I mean, you started it once, but then you didn't have all the operations handled and it cost a little bit more money than you thought. So you had to put it on pause for a while before starting again when you have more disposable income to throw at it. Tell me what it's like. You're a bootstrapped founder, which is pretty interesting because you're integrating the tech side of it where you're doing all the outbound with AI, and then you have the algorithm that'll go through and recommend the plans on the website and whatnot. So you're a broker slash tech company at this point.
Yeah.
but you're completely bootstrapped. You're for the majority of the time you were solo founder. Tell us what your journey's been like on the back end of the business.
Yeah, it's been a wonderful journey. Pros and cons to being a solo
I was gonna
bootstrap
say
founder.
wonderful, and then highs and lows definitely got to hit at some point. But
Yeah, there's different challenges. Most people in my shoes probably would have raised capital, and looking back, that makes a ton of sense. And having a co-founder makes a ton of sense for the kind of route that, or the kind of company I'm building.
Mhm.
But I will say there's definitely some pros and some cons that I think might be helpful for listeners who are trying to figure out whether they should remain a solo founder or get a co-founder.
If you're okay with this too, this is a purely idea I just had for this episode. Obviously, we're in kind of different boats. I mean, I went the co-founder route with my co-founder Connor. We went the venture-backed route as well. So it's
Mhm.
kind of fun. We I think we could play both devil's advocate and on the angels aspect of it, and we can kind of bounce ideas back and forth.
Totally.
So start off. Why? Tell us why you chose to do that,
Mhm.
and then I'll kind of play the devil's advocate on the other side, so people who are in our position can kind of get both sides of the coin.
Yeah. One of the biggest reasons I chose to go the solo founder route was concerns over picking the wrong partner. I had an uncle who had a business. There was embezzlement with partners, and it ended up horribly for them. And they had this massive debt. And so, with a horror story like that, I just wanted to avoid all of that
All right.
and not get stuck with the wrong partner. And now that I've been through BYU and met a lot of companies such as Brandon's that does have a successful partnership, I'm much more open to that at this point. But originally I wanted to make sure that I was able to make the decisions I wanted to for my business and not have to worry about somebody else potentially sabotaging it
Yeah.
if they were the wrong fit.
And so once again, I'll play the devil's advocate here. I think your concern is completely justified. I talked to somebody about maybe a month and a half ago. They, with their business, it was a tech company. They went through, they raised, I think they're on their seed or Series A round, raised a ton of money. And then as soon as the co-founder saw all the flashy dollar bills inside their bank account, he started embezzling. And it didn't take them long to catch on. It wasn't a massive company. So it's not one of these situations where it goes years and years before someone notices. It took them pretty quick.
Hmm.
But the guy also noticed the lifestyle started changing very quickly once they raised that money. His co-founder, who he had trusted, they built something. They've gone up to, like I said, I think it was a Series A round. Then all of a sudden, he gets a new girlfriend out in Miami, and he starts buying the Lamborghini. He starts going to all the fancy restaurants. So even a guy he trusted, and they'd been building the business for a couple of years together. They were all in with each other, but even later down the road, they still had that mishap.
Yeah.
But on the devil's advocate side as well, I've only ever seen tremendous benefits. I think when I was looking for a co-founder specifically, I was looking for somebody relatively around my same age, relatively in the same kind of life circumstances. So my co-founder Connor married, no kids, same as me, married, no kids. So we had a lot of the same life principles dialed in, which I think makes for better work-life balance as well. Because we
Mhm.
recognize, all right, we're going to work really, really hard, but then obviously go on the date night with the wives, or there's
Mhm.
occasions when that happens. But at the same time, we also didn't have to worry about, all right, now we have to make sure we're home to tuck our kids in at night if we have those late nights. So there's a trade-off on that end as well.
For sure. And I think once you realize the horror stories, you can find ways to mitigate it and
Yeah.
still make a partnership work. And so hopefully this can help somebody out there. But yeah, even my uncle, it was his best friend since a kid. He totally trusted him a ton. And so sometimes you just have to you have to have those checks and balances in place, even when you trust the person,
Oh, yeah.
just because you never know what money is going to do to somebody.
Oh, absolutely. And
Mhm.
those checks and balances are crucial. I don't care how much you trust them. Constantly refer back, have multiple people looking at the books. We're purely talking on the money side, but on
Yeah.
everything, always have somebody who's present and you can have those tough conversations. That's another thing I'll say on the co-founder side real quick is make sure you're not going to have a co-founder where you can't have tough conversations with. I'm not saying sit there and get in fights and argue all the time and whatnot, but make sure when you are truly passionate and you believe one way, make sure your point gets heard. And then also on the flip side of that, make sure when your co-founder truly believes on one side of the coin, you're actually sitting there and listening to them and hearing both sides, because I think that's where a lot of the contention can come from. And also that's where the opportunities arise where they could start cheating you or cheating the business, the investors, or whatever it may be.
Right. Yeah.
So now that the co-founders kind of checked off there, tell us your version of why you didn't go venture backed. Like you said, a business like yours would be a great stream. There's plenty and plenty of specific groups that only invest in the insurance space. So
Mhm.
why didn't you go that route?
Yeah, it's a great question. Originally, I just wanted the flexibility at the time, and looking back, I think, yeah, I mean, we're potentially open to raising in the future, but really
Little asterisk by that, right?
little asterisk. But honestly, I just believed in the idea enough, and looking at the financials, I believe that I could potentially do this without getting the venture capital. And so the thing with that, venture capital has a time and a place. And even though I'm open to it in the future, I think the longer you can wait to get venture capital, the more it can be on your terms and the better valuation and better terms you can get. And so that was the main thing. And also, I didn't want to potentially start a business and get a bunch of money and then lose that money for other people. I know that's a risk that venture capitalists take. And by all means, if someone's willing to give you the money, they know the risk, it's what they
Right.
do, take the money, right?
It's still a scary thought, though.
Yeah. And so part of me just wanted to make sure that this was something that would validate well and that I could scale. And then at that point, I'd consider venture capital if the financials made sense and it would actually allow me to grow and outpace competition. But if it ended up being something we could bootstrap, then you do maintain some extra privileges and extra equity if you can do that.
Going to the devil's advocate point now, I would say I would actually agree with the majority of that. Go as long as you possibly can, unless you have some kind of revolutionary thing that you're trying to grow with. And that was kind of the route that Connor and I took. We want to grow this thing very, very quickly before other major competitors step in the space. We want to be the name of the game when it comes to automated collections. And that's what we're doing here at Interval. And so on our journey, we want to grow fast. We want to have all those capabilities, but at the same time, it does come with costs. If we bootstrap for another 3-4 years and we were able to become even more profitable, then the valuation would have been better. The terms would have been more favored towards us versus, all right, here's a couple founders. We're gonna jump in at the early stage. So I see both sides of the coin on that one.
Yeah.
The one thing that I liked that you just mentioned too was the commitment. I think it's something that we haven't touched on is you and me are both pretty frugal guys. We don't like spending a ton. We like seeing where we can cut costs inside of operations. Heck, you're the king of it when it comes to, all right, I can pay somebody to do that, but also I can figure it out for myself for a couple of days and I won't have to pay them. And I think since we've raised that was a big thing that I had to come over to. It's like, somebody is trusting us with their money that they went out and raised. If it's an angel investor, it's their funds, or if it's a VC, then they have their entire fund that they're putting into you because they're believing in you as a company. Yes, there's risks, but I actually 100% agree on your end of it, where we don't want to be the company that lets the investors down. 9 out of 10 odds that the business won't work, but at least statistically speaking, but it's still that scary thought in the background.
I think you should fully believe in it if you're going to take the money.
Oh, absolutely.
Is the thing. So I just wanted to get it to a point where I could fully believe in it and I could see a profitable path moving forward. And the other thing too is once you get investors, there's extra responsibilities that come on. And same with having a co-founder too. I mean, you're accountable to your partner, which can either be a really good thing, but there's also some drawbacks to that. And for people out there who might want more of a lifestyle business, there is some flexibility with just being a solo entrepreneur where you can pivot quickly, you could shut a business down quickly, you don't affect anybody but you and your own finances. And so there is there's an upside on that. But the cons is also if you're not highly disciplined and motivated, you might end up checking out, and the co-founder can help keep you accountable, which can be a really positive thing because ultimately you either have to keep yourself accountable or have somebody else help you stay accountable. And really you should have both. But yeah, and same with when you raise capital, now you have an obligation to ensure that those funds are used well, and it makes it a little bit more difficult to make those pivots. And because ultimately my philosophy is you want to optimize your life for net fulfillment. For anybody who's read the book Die with Zero, the philosophy is rather than just optimizing your life for net worth, where you make as much money as you possibly can, you do whatever will make you the most fulfilled overall, whether that's doing service, whether that's making money, whether that's spending time with your kids or your future family. Regardless, you want to optimize each of those areas in order to do whatever's most fulfilling for you. And so I think sometimes when you have less obligations, you can be more flexible in that. But eventually, if you really want to get far, it makes sense to get a co-founder, it makes sense to raise capital. And for me, eventually I plan to do those things most likely, but it just hasn't gotten to the point where I felt it's the right time yet.
Right. And that's the end of the day too. I think we can give our pieces of advice as founders, but at the end of the day, you also have to feel comfortable with it. If you feel like you're just getting forced into a situation, that's probably not the route you should be taking then. If there's any kind of trepidation, I'm not saying those little thoughts that get in your head and say the what ifs, but like if there's actual trepidation inside of it, then that's the moment you got to sit back and say, is this the right path for me? And it can go on both sides of actually raising or not raising. I think you can feel them both. But last question I want to ask you before we close out today's episode of the Get Over Yourself podcast. You recently also became a father. I say recently, he's a year old now, but what's it been like navigating school plus marriage plus being a father while working on a startup?
It's been intense, actually. Yeah, definitely a lot to juggle and a lot to manage. Now that school is out of the way, it's been nice to have a little bit more flexibility on that. But, it puts things into perspective. As a father, you want to make sure you provide a good home for your wife and kid. And so it's kind of changed my perspective in
Mhm.
that right now, what I've been focused on is building a foundational income stream that will provide well for my family and then give me enough time and resources to take bigger risks and do more risky things with the business investments that I make in terms of different ideas I have or different routes we pursue as a business. And so I think that's one tip I'd also give is if you have any way you can kind of secure your finances to then be able to take bigger risks, and not foolish risks, but rather risks that have potential upside,
Healthy risks.
healthy risks, I'd highly recommend it. So for me, I started off doing the summer sales and saved up money in order to provide for the family while working on a business. And then after that, now we're generating revenue, and eventually we have plans to potentially roll out our voice AI agent to other insurance agencies so they could actually also benefit from that same system, and we kind of pivot to a B2B SaaS product. But ultimately, I think knowing that, at the end of the day, what satisfies you the most is going to be relationships and a proper balance of all things. Because business, to me, I feel like I need business regardless of how much money I make, just because it helps me grow. It helps
Mhm.
me deliver value to people. And so there's something deeply fulfilling about that. But I also want to make sure that I'm there for my son, I'm there for my wife, and that all things have their proper place.
That's awesome. Well, Levi, I appreciate you for joining us on today's episode of Get Over Yourself podcast. I'm going to link the Choice Guard website down in the episode description. So if you know somebody who's searching for Medicare right now, I promise you, Levi is going to be the most honest and open with whoever you guys are trying to work with, be that a relative, a friend, family member, whatever it is. Guys, thank you so much for listening to another episode of Get Over Yourself podcast. Make sure to leave us a review if you enjoy listening to these week over week. And we'll see you next week for another great episode.